let's look at how the performance of the markets impacted the Wespath fund returns. With that, I will turn it over to my colleague Karen Mansko for the update.
Thanks, Joe, and thanks, everyone. I'm going to start off the performance discussion by first talking about our flagship balanced portfolio, the Multiple Asset Fund. As a reminder to our viewers, the Multiple Asset Fund has a long-term strategic allocation to 65% equities and 35% fixed income. On the slide, you can see the allocation the Multiple Asset Fund has to each of the individual Wespath funds. Also, what I like about this slide is that it really showcases the broad level of diversification the Multiple Asset Fund offers our investors. The next chart shows the net of all fee performance of the individual Wespath funds versus their respective market indices. Today, I'm going to focus on the second quarter performance and also highlight the one-year fund returns. Before I dive into the results, please note the returns we are showcasing are net of all fees, and the benchmark we measure the performance against does not have a provision for fees. Despite having positive absolute performance, the Multiple Asset Fund underperformed for the quarter by a modest 79 basis points net of fees. The underperformance was driven by the performance of our U.S. equity fund, which comprises 35% of the Multiple Asset Fund. And I'm going to talk more about the specific drivers of the quarter underperformance for this fund in a moment. For the quarter, the International Equity Fund and the Fixed Income Fund both outperformed their benchmarks by 5 basis points. Despite the Inflation Protection Fund underperforming for the quarter, the fund's absolute returns have outpaced the Fixed Income Fund for the quarter, year-to-date, and one-year time. Despite the near-term underperformance by the Multiple Asset Fund, the fund is outperforming its benchmark net of all fees by over 2.5 percentage points for the 1 year. The strong relative outperformance for the 1 year has been driven by the collective outperformance of each of the Wespath funds that you can see on the slide.
Karen, I know we typically show the performance of the Multiple Asset Fund versus a peer comparison of foundations and endowments that are custodied with our custodian BNY Mellon. How did the Multiple Asset Fund fare relative to this comparison?
The information on the slide that we are showing is updated through May, since the June data is expected to be released later on this month. But looking at the information, specifically the 1 year time horizon and longer, the Multiple Asset Fund has outperformed the median foundation and endowment portfolio and performed in the top quartile for the 5 and 10 year time horizon.
So Karen, moving on, why don't you tell us how the individual fund contributors and detractors for the quarter?
So starting with our Multiple Asset Fund, I talked briefly about the performance on this slide, but as you can see, the primary driver of the fund's underperformance for the quarter was the underperformance by our U.S. equity fund and the slight underperformance by our Inflation Protection Fund.
So I mentioned during my comments that we continue to see strong performance in the broad markets with large cap stocks leading the way for the quarter, but they're still lagging small cap stocks year to date through June. Also, we saw a rotation that started at the end of the fourth quarter where value was outperforming growth. I know this is dissipated in Q2, but value still has strong returns for the first 6 months of the year. How did this impact the U.S. equity fund performance?
You're absolutely right. It really has been a value versus growth story this year, which is much different than what we saw in 2020 and even in the years before that. A reminder to our viewers is that the U.S. equity fund has a long-term strategic bias to underweight large cap stocks and overweight small and mid-cap companies. The fund also has an allocation to private equity and private real estate. So despite the fund's small and mid-cap growth overweight contributing to the performance for the quarter, as we saw growth stocks outperform value during this time period, the fund underperformed by 2 percentage points. The fund's underweight to large cap growth was a detractor, but the primary driver to the fund's underperformance was really the underlying stock selection by our investment managers. The names that helped the portfolio last year and even in the years prior were out of favor with this shift that we saw in the market cycle. So for instance, companies like Tesla and Teladoc that all performed very well in 2020 and even in prior years were down for the quarter. Last, we always like to report the impact of our ethical exclusions and that they have on the fund performance. So for the quarter, the fund's defense exclusion modestly contributed to the fund performance. Turning our attention to our International Equity Fund, this fund outperformed its benchmark by 23 basis points gross of fees. The primary driver to the fund's outperformance was our allocation to international private equity and the underweight to developed international markets. A detractor to the fund's performance was the alcoholic beverage exclusion, but that impact was minimal.
Now, Karen, emerging markets outperformed developed international markets in the quarter. I recall in prior updates that the fund had an overweight to emerging markets. Does the fund still have that overweight, and how did that affect fund performance?
You're correct. In prior quarters, the fund has had an overweight to emerging markets, but this overweight has diminished. And the reason is that China A shares were added to the index last year, which increased the index allocation to emerging markets. With this said, our allocation in the fund did not adjust, but the allocation increased in the index due to the A shares being added. So with this said, the fund's allocation to emerging markets is relatively in line with that benchmark allocation.
All right, so moving on to look at bond funds performance, I noted during my market update that bonds have improved in second quarter despite a rocky start to the year with yields and rates so low. How did the fixed income fund fare with the improved performance by bonds?
It's really been a challenging year for bonds, with the exception of high yield bonds. As you showcased earlier, high yield bonds are up over 3.6% year to date, with the other bond asset classes in negative territory. But during the quarter, we did see yields come down, which was positive for high yield bonds and also the other bond sectors, such as treasuries and investment grade. I think it's worth noting that also the US dollar depreciated relative to emerging market currencies during the quarter. With this said, the fixed income fund outperformed its benchmark by 17 basis points for the quarter. The primary contributor to the fund's performance was the fund's allocation to emerging market debt and issue selection by our Core Plus manager, PIMCO. PIMCO's allocation to non-agency mortgage-backed securities, investment-grade industrials and financials contributed as we saw the tightening that we saw in the quarter. Also, PIMCO's selection in dollar-denominated emerging market issues contributed. Last, the fund's allocation to investment-grade credit was a contributor to the performance. Detractors to the fund's performance include the modest allocation to cash and also the overweight allocation to global bonds, specifically developed market.
So moving on to our final fund, the Inflation Protection Fund. You noted on the performance slide that the Inflation Protection Fund has outpaced fixed income fund on an absolute basis for the quarter, year to date, and even one-year time frame, but modestly underperformed for the quarter.
So despite the modest underperformance, the Inflation Protection Fund has really showcased its purpose this year as being a fund that was created to protect investment portfolios against unanticipated inflation while providing that stream of income. The fund underperformed by a modest 13 basis points gross of fees. So despite the fund's underweight to global and UK inflation-linked bonds contributing to the performance, the fund's allocation to senior secured loans, which are not in the fund's benchmark, detracted due to that shift downward in the yield curve, which caused senior rates to also fall. Also, the fund's overweight allocation to US tips also detracted.
Great, Karen. Thanks for that update.